So hi everyone, I'm here with Matt Campion, who's the director of Campion Pickworth, and they're a credit risk recruiting consultancy. So Matt, welcome. Thanks very much for joining me today. It's great to have you here.
Hi Chris, yeah, pleasure to be here.
Good stuff. So I think first off, we wanted to chat a bit about the recruitment market and what's been happening. And it'd be good to get your sort of first off a bit of an impression around what's happened since lockdown or what's happened over the last year. I mean, it's been a big change for everyone. It'd be just good to sort of get your view really.
I think recruitment has continued. I think during the first lockdown, it did stall quite considerably. So from March to June, I think was a particularly tough time out there. Since then, recruitment has continued with different challenges. I mean, there's been some positives in terms of candidates being more available to interview. I think the video interviewing processes have gone really well as well. And I think there has been key areas of recruitment that have been ongoing. So obviously the bounce back loans and C-bills have driven some recruitment there. There's also been other areas of recruitment that's been driven on the regulatory side. So whether that be ongoing IBOR programs, IR pair programs, or other elements where regulatory deadlines are coming up and ones that haven't been pushed back.
So are you seeing sort of like a change where sort of people are now staffing up, or thinking about risk in terms of like what's going to happen when we all go back, or is there been a subtle change into like there's now more investment available, or is there a change into like types of people that are now being looked at? Sort of thinking ahead really.
I mean, there was a lot of work initially around operational risk and around the challenges of working from home from an operational risk perspective. Right. And obviously, there's been a lot of work around people planning go back to work. And I think what's interesting is that different banks have a very different view of return to work. So some are being much more cautious, where they're saying they're not going back into the office. Some are much keener to get back, and that dynamic will be interesting around when banks return. And obviously the benefits of being in the office, some organisations see that more clearly than others. Obviously the real estate piece, given the cost of real estate in central London and how banks are organising themselves. So we've had major banks like HSBC and Lloyds announcing that they're going to reduce their office locations and office size. Yeah. I think that trend's going to continue. What other banks like JP Morgan and Goldman Sachs have come out and said, no, we're very much going to return to normal with people in the office most of the time.
Yeah, I suppose, how's that work with remote interviewing? So obviously we've been sort of like really remote. Most of us have been remote over the last 12 months or so. I mean, everyone's got used to remote interviewing, but is that sort of indicative? Like, is it going to be a problem when people then go back into the office for those that have been remote and then have to go back in the office? I mean, what's your kind of view on that? I mean, how have banks approached that?
I think remote interviewing has been brilliant. I think we've seen potentially people having slightly more steps, so doing slightly more interviews to make sure they're comfortable with the person hiring. But the onboarding process has run very smoothly in terms of interviews, carrying laptops to people, joining that. I think the challenge to get to know new team members in where you're only on video calls, I think that'll be refreshing as people return to work. I guess the challenge might be on the candidate side in terms of going into the office, and that challenge when people are potentially going at different paces and different returns to office. But I think speaking to most hiring managers, they're happy with video interviews are perfectly sufficient for them to make adequate hiring decisions.
And so do you think some of them are happy with the remote work, or I mean, how much pressure is there on to go back in the office? So you said this, it feels like it's kind of getting divided, right, between people who seem like they're quite happy sort of doing the remote work and it's actually quite productive in some ways, whereas other ones would say, well, look, we missed the social kind of contact as a result of that, and that's missing something from our business model.
Yeah, well, I think it's on an individual level as well. So people that miss having that pint after work and that social interaction, or that coffee, or that lunch with work colleagues as well. There's that aspect, and other people who potentially have longer commutes, or they have a young family, who potentially are seeing more of the benefits of working from home and that drive. So it'll be, I think, it's an interesting split, because I think a lot of young people value that social side. A lot of people with families tend to be slightly older. They're valuing that. So it'll be interesting to see who are the beneficiaries. And talking from a recruitment perspective, it'll be interesting to see where banks that offer more flexibility to hire people for remote working can benefit of offering that flexibility. And we saw that before the pandemic, where organisations that were more proactive on flexible working, people value that, and it motivates. Obviously, money is one driver, but the flexible working actually really motivates people to move because they see friends who have that flexibility and they want that themselves. And I think we could see that drive candidates to new employees.
Yeah, it does feel like during over the last 12 months during lockdown, there's been a lot of sort of press and attention around flexible working, remote working. It's almost like it's building up a real sort of head of steam, and it kind of felt like the last sort of month or so they start to see that sort of like, well, it's going to be valuable going back in the office, sort of bleeding back in a little bit, sort of into the conversation, and you can just feel like there's going to be a bit of a tug of war, and I suppose it's just, you know, how much will that benefit really, I suppose, drive the flexibility really be a benefit in terms of attracting candidates versus not? I suppose that's the big outstanding question, I would think.
Yeah, and it was driving it before lockdown, the flexible working, and you look at the big banks and particularly the consultancies trying to change their image, the image of a consultancy of long hours, not being flexible and not having that flexibility. The Big Four and others have really driven that cultural shift to make it easier for people returning to work, making it easier for diversity reasons as well, in terms of offering that flexibility so they can attract. Well, the key is getting the best possible talent, and if that's through offering flexible working, then that's obviously a clear benefit on that.
And when you chat with consultancies, so I mean, there's a huge advantage, you know, to be able to jump on a video call and sort of deal with things sort of straight away, rather than getting on a plane and flying to a different country or, you know, wherever it is. And there's that sort of immediacy, which sort of, you know, are they seeing benefits from that versus, I suppose, going back to the old ways of doing things? I mean, is it going to be, how's it going to sort of play out? Is it a hybrid model, do you think?
I think so. I think they missed the opportunity to sell more, though. If you talk to the senior leadership team at consultancies, that informal coffee on the client site, or the opportunity to see the bigger picture and say, oh, well, there's this opportunity coming up or that opportunity coming up, and having that ability to be able to upsell and grow the business is probably prohibited by lockdown. But I think in terms of adding that flexibility to be able to not travel, particularly for I guess the more global consultancies, so your McKinseys, your Oliver Wyman's, your BCGs, who have very much a European or global model, and even the Big Four have a very much a European model as well.
Yeah, it's that ad hoc conversation where you get to find out about the other person, and that's how you sort of build friendships in a way, or relationships at least anyway. That's the piece that's almost like missing as much as the actual getting the work done. It almost feels like, I suppose, the two of them cross over at some point.
Yeah, and particularly I think when you're in stressful projects with delivery deadlines upcoming, and you need that personal relationships to be successful as well during those stressful times.
We talk a little bit there around sort of, I suppose, international travel and those kind of things. And Brexit's been a big thing that's been in the news over the last 6-9 months with the end of the transition period, at least in the UK. How do you think that's going to impact recruiting? And, you know, some of the conversations I've had, there's been a lot of talk around sort of, you know, global recruiting models, people working from anywhere. Certainly we can do that with anywhere in the UK within lockdown. But how do you think it's going to impact us going forward?
So I think there's two different questions there. So the first question around Brexit, and in terms of the points-based system that the government are implementing. So we have so now it's the same to hire an Italian as it is someone from India, or someone from Spain to someone from South America. So we could see much more global recruitment, where particularly, obviously, South Indians or South Asians, produce a lot of STEM, are very strong in STEM. Their academic is STEM focused, and they produce a lot of STEM graduates, which are much desired in the UK. And particularly we see a lot of offshore locations in India as well. So these candidates have big banking experience and relevant risk experience, and they have a desire to relocate to the UK, and it's much easier to hire. Will be much easier to hire these candidates. The labour market residency test has been scrapped, which means you had to advertise the role for 28 days, which is called a delay in the process, which was quite frustrating. With that being scrapped, that's another benefit. And also the ICT, so the intercompany transfer cooling off period has been scrapped, which was a 12-month cooling off period. So if someone came, a Deloitte employee, say came from Deloitte India to London, they couldn't apply for a tier 2 visa. They had to go back out of the UK for 12 months before they could apply for a tier 2 visa. That has been scrapped now. So I think we're going to see much more of a global recruitment strategy, particularly for the high in demand skills. So risk modelers and analytical people always seem to be in demand. So I think we're going to see a much more global approach to that. In answer to your second question, which is more around remote working and potentially the opportunity for people either on an individual level to locate themselves outside the UK, or more on or more companies looking to nearshore or offshore. So on an individual level, I think the challenges are still around the right to work status. So I think companies will not recruit someone for a UK job unless they have the right to work in the UK. Obviously, they can offer more flexibility in terms of location, but they need to have the right to work in the UK. So that could be one key stumbling block in terms of that dynamic, and also the uncertainty of returning to work, how much that person needs to be in the office, and whether, as we return back to the office, whether that 100% remote working will slowly die away to 80% to 70%, and then it becomes less viable to be based in South Africa or Poland or wherever else globally that person wishes to be based. So it'll be interesting to see how that plays out. But I think on a more strategic level, so looking at how banks organise themselves from the top down, I think this has taught banks that they can have much more global delivery models, which we see obviously has been a trend for a long time in terms of that offshoring and that nearshoring process, and I expect that to expand. So if you look at HSBC Birmingham, you look at RBS recruiting in Edinburgh rather than London, that growth of nearshore centres, or BNP Paribas have got a big nearshore centre in Portugal as well, in Lisbon. And I think due to cost savings, we could see a drive in that, and that ability to recruit globally. But these banks need to, in order to have those offshore capabilities, have to be able to there's a level of investment to get them off the ground, and whether we see more smaller organisations doing that will be interesting. I know one savings bank, for example, have an offshore centre in India. Whether we see some of the other challenger banks moving more in that direction as well from a risk perspective will be interesting to see.
The remote working has sort of opened people's eyes to getting access to a much larger skills pool, really. I mean, you can pick the best from, you mentioned STEM skills. You can pick the best from really around the world. And I suppose it's just is the grease in the wheels to be able to get those skills to move around, and how much that is going to be, how flexible that's going to be going forward, I think is going to be interesting, isn't it? There's an overmatch between sort of, I suppose, the legal requirements and the national requirements versus really, I suppose, like a global skills based piece, because technologically wise, we can talk with anyone pretty much anywhere now, which is interesting.
Yeah, and I think that's a question for HR professionals to answer in terms of how adaptable and flexible they can be. I mean, I think that feeds into IR35 as well. Change in regulation coming up, we've seen a drive for some contractors to wish to work in Europe, so taking roles in either Amsterdam or Ireland or Paris to escape the IR35 regulation. Whether we see that trend continuing and banks deciding to have contractor roles based in Europe to attract contractors, particularly where you've got global banks where they have multi-centres to be able to do the work anywhere and avoid that IR35 regulation, will be interesting to see whether that's a trend post the 6th of April.
So just going back to remote hiring and remote interviews. I mean, what you got any tips for what works well with candidates versus not? I mean, what's your advice, having been through it many times over the last 12 months?
I think the most frustrating thing is bad internet. So the feedback we get is make sure you're sat near your router and you've got good internet, because there's nothing worse than someone cutting in and out and you not being able to interview them properly. So I think that is like a key frustration that we hear from hiring managers, that we couldn't make a decision because the internet was so bad on their side. So I think that's key. think another challenge, we get more questions about what to wear, which I think is quite a difficult question to answer as well. Obviously, people being slightly less smart, I'd obviously recommend to be wear a shirt to an interview, but that's another challenge in terms of, particularly if you're interviewing at a fintech or different organisations have different cultures as well. Yeah. So I think there's that challenge as well. But in terms of the process and being able to build rapport over video and understand the role, we haven't seen too many challenges around that.
Yeah, I think we've all got used to it quite a bit in terms of like just interacting with people over video screens. And I know we were chatting before a little bit about is there almost like going to be a generational divide? And so I almost feel like I'm probably on the wrong side of it now, on the older side of it, in terms of like we're growing up now, almost like having these video calls, and some of the younger folks, it's just going to be native, right? So just like just like it was with pre-computers versus post-computers, or pre-mobile phones, cell phones versus post them, or smartphones. I mean, do you think we're going to see something with that? Because we just got so many of us just got so used to doing everything on video, and it's almost like, is that become, for some of us, for some of the generation, or like the younger generation, does that become a go-to to be able to? They're much more comfortable than, say, older folks, maybe like myself, who maybe prefer the face-to-face interactions.
So yeah, I'm probably on the older side as well. So in terms of that, I'm not sure how capable I am of answering that question, because I always prefer the personal interaction. I'd very rather go and meet someone for a coffee than do a video interview, and I think, or video meeting. I think you get much more from that personal meeting. But maybe the younger generation don't feel that. But I think in terms of that informality and that kind of that you get, particularly where you have a group meeting, there's no chance to break out, or people don't choose to break out and go into that when they're at big meetings. While if you go into a conference room and you have a meeting, you'll grab someone at the end for 5 minutes to have a chat. That dynamic goes away with video calls, and I think that's cross-generational. Obviously, the younger generation are used to other ways of interacting, but I think that's cross-generational, and that ability, I think, is key for someone's career, to get to know people in different departments, build your profile across the organization. If you want to progress, you need that. You need to know people, them know you, and that kind of interaction helps you progress internally within your organization. I think that element of face-to-face meeting is vital to that.
Yeah. What do you think the trends are going to be sort of going forward, though, in terms of hiring, and what kind of skill sets are you seeing sort of like people need now, they're looking for now?
I mean, the IRB repair program, there's major projects within that, and it's regulatory led. Obviously, we've seen, talk about IRB again, we've seen a lot of the challenger banks with the changes in rules. A lot of the challenger banks are moving down that IRB journey. We've seen, obviously, the PRA talk about operational resilience and having a more customer focused aspect rather than internal looking focus on operational resilience, but a customer focus on operational resilience. So we've seen a lot of that branch away from operational risk to be in its own right, operational resilience. And I guess the largest one is climate change risk. So we have seen, obviously, with the PRA inviting the big 7 banks to involve that in their stress test this year. We've seen talk around climate change analytics and how that's done, particularly on a granular level. That having the data to be able to do climate change risk properly, and how banks do that, I think I think that market is very, very immature. Whether they can learn from asset managers who've obviously been more advanced in terms of that ESG journey, or learn from industry, so from gas providers in terms of their work, or insurers as well have done a lot of modelling, and they have a lot of capability on the modelling side within this. So I think that ESG space, and I think that could be almost the next branch of risk management, and break out on its own, to have dedicated climate risk change teams. And obviously then, if it's involved in the stress test, they need to validate those models. There's a whole process that needs to go around that climate change risk, and embedding it as a potential risk for the organisation. And given Biden's win in the US, Johnson in London, climate change is high on the political agenda. It's been on PRA's agenda for a while as well. I imagine that to drive through. It's on the EU's agenda as well. So I think there's going to be a lot of increased regulation, and banks want to do this as well. They want to help. They want to help the environment, and seem to be helping the environment. So I think that element will continue to grow.
How much do you think the COVID pandemic has really sort of accelerated, particularly operational risk? So you talked a bit about resilience, and if you sort of go back 5 years, I mean, we knew that there was potential to have a pandemic. I'm not sure that any of us foresaw it being quite to the extent that we've seen. But do you think it's, outside of what's happened over the last 12 months, do you think it's really raised that whole topic around resilience and operational risk? And it's just sort of, I mean, the guys who do it have been talking about it for a while, you know, we know that, but it's just think it's raised the public consciousness in terms of like making sure that people are prepared. Have you seen a change as a result of it?
I think it's hard conceptually when something's a 1 in 1,000 years, 1 in 100 years, 1 in 200 years. Conceptually, it's very easy to dismiss those risks and say they're not going to happen on my watch, or they're not going to happen. Maybe we'll see a change where we need to actually think these are going to happen and plan accordingly. I think banks have reacted well to the challenge in terms of that. If you look at operationally, I'm talking about in terms of we haven't seen any breakdowns in service or customers affected or customer impact. We had the challenges around payment holidays and administrative perspective. I think that was difficult for banks, but I think they've overcome that hurdle as well. So I think in terms of from an operational point of view, banks have actually performed quite well. The migration to home for people working from home and the changes in operational changes there have actually, if you speak to people, have gone quite well. So I think operationally we've reacted badly. And then if you look at it from an operational risk loss point of view, I think most of the losses are likely to be on the credit side, but we've had a lot of government support around that. Obviously, if you look at the expected credit losses, IFRS 9 losses have skyrocketed. If you look at the bank's recent results, a lot of them have forecast larger that, and I think it's been a real test for IFRS 9 modelling in terms of feeding this in and how you deal with a huge downturn and what those losses are going to look like, and that I think that has there's a lot of work to be done there on the analytical side of how conservative you need to be, and it's been a real test for IFRS 9 and the forward-looking nature of credit risk modelling there.
Yeah, and I suppose the test will be what happens over the next 9 months to see, I suppose, the accuracy of the models and which approaches works best, and it'd be quite interesting to see how that sort of plays out to a certain extent. You would think that most of them have probably been a little bit on the conservative side. You would kind of hope, but I mean the nuances will be in the detail, and it's ever evolving, isn't it?
Yeah, exactly, and we don't know where, and also we haven't seen when the government withdraws support, then we could foresee higher credit losses and that feeding in. So it'll be interesting to see how that does play out.
So top tips for the future, particularly for businesses in terms of getting the right skills in, but then also for candidates. Just what are things that they should be thinking about now? Do you think, if you put your crystal ball hat on, I suppose, if there's such a thing?
Well, I think that's a difficult question to answer because I think every candidate is different and where they want to go. But I would say the advice that you've got to give to candidates and what they need to think about is where they want to be. I think this gives an opportunity for people to step back and look at their career and say, this is where I want to be in 2 to 3 years' time. This is the work-life balance I want. These are the skills I need to get, or this is the area I want to move into. I think an internal move is always easier than an external move. So in looking to if you're looking to go into a new area, look at that internal and build relationship with the team you want to go into, and looking to upskill in that. I think data analytics and that kind of automation, RPA, data analytic element is only going to keep growing. So if you have analytical skills or you're analytically minded, grow those skills, enhance them, embrace them, take analytical roles, because I think in the long term it may be a harder role to get, a harder and a harder role in general, but that will pay off in the long term because you'll have that analytical background to then go into either a wider role. And I would encourage candidates always to have breadth in their career in terms of what they covered. If you just go up a very narrow path, I think you're more likely to hit a glass ceiling. While if you cover broader risks, different roles across model build, model validation, or wider risk types, it gives you the opportunity to then grow to more senior roles as well.
So Matt, it's been really great to chat with you. I really appreciate the insight and just hearing about some of the developments that you think are coming up. It's been a fascinating sort of 12 months. I think the future is going to be kind of interesting the next few months as well, I think. So thanks very much.
Yeah, pleasure. And yeah, thanks a lot, Chris. I enjoyed it, and it's going to be a very interesting next 12 months of where we go next.
Yeah.